Do you have an LLC? Have you ever wondered, how do I pay myself through an LLC? How do I tax myself through an LLC? Well, in today's video, guys, I'm going to show you step by step on how you can pay yourself correctly through an LLC. Guys, stay tuned. Welcome back to the channel, guys. If you're new to the channel, I'm Credit Coach Q, and I created the first cloud-based software that allows you to put your credit repair expense into your own hands. Guys, if you're new to the channel, I'm super excited because I have a banger for today's channel. On today's video, we're going to talk about actually paying yourself through an LLC. But before we get into the video, guys, please like and subscribe to the channel. It allows us to reach a wider audience. It allows YouTube to push this content within the algorithm, and it allows us to leave these lights on. Guys, please like and subscribe to the channel. Guys, if you have anything derogatory in your credit report, I mean anything negative, charge-offs, late payments, bankruptcies, medical bills, guys, you name it, please go over to mycreditapproved.com. It's the website and the software that I was telling you about that allows you to put the full experience to your own hands. Guys, people are removing thousands of dollars worth of debt by themselves. They are no longer using credit repair companies. They are putting this information and this experience into their own hands and appreciating on a deeper level. Guys, please go to mycreditapproved.com, check out the software, and start removing these items, guys, if you have anything derogatory on your credit report. Okay, so let's dive straight into the meat and potatoes of this video. I'm super excited about this because I get a lot of business owners asking about how to pay themselves through an LLC and how the taxes actually work through an LLC. So let's dive straight into the meat and potatoes. Okay, so the first aspect that you need to understand about an LLC is learning what is an LLC. An LLC is a limited liability company. So it's basically what it stands for. It's a limited liability company that limits the liability that you have on yourself versus the company. So if anything happens pertaining to the company, if like a lawsuit or anything like that, the liability would not be on you directly. It would be on the company, and they would not be able to go after your personal assets. So that's what a limited liability company is. Now, an LLC has two different versions. It has a single member and it has a multi-member LLC. A single member is when you are applying by yourself, and a multi-member is when you have partners or investors or things like that that's actually going to have ownership of the company as well. Now, you have to understand that when you are under a LLC, you are not an employee. You are not technically a CEO. You are not an employee of the company. You are actually a shareholder. Now, that is going to be one of the biggest reasons why you're not going to get a W-2 under the LLC registration. You are actually a shareholder. You do not pay any taxes on your LLC company. The taxes will be divided in come from your personal expenses because it technically is one. I'm gonna explain that a little bit more later. Now, when it comes to paying yourself, it's a lot of different ways you can do it. Actually, the payment method is called distribution. So a distribution to yourself can literally be anything. It doesn't have to have a limit or a cap attached to it. You can literally pay yourself 100% of the company if you wanted to, if you have full ownership of the company. I would not advise that because you have other expenses to look out for, but you could do that legally only because there is no cap. Now, it is a cap for S-Corp. S-Corp does have caps on how much you can pay yourself, but it's a separate different entities. Most people actually go to S-Corp after they reach a certain level within a LLC because the S-Corp has a lot better tax incentives and tax perks for owning a company. So a lot of people actually go within the S-Corp registration. Now, what you have to understand is that the LLC is going to take a lot of responsibility. A lot of companies that has LLCs fail because they over leverage the way they spend the money. Now, you have several different options and the ways to actually pay yourself through an LLC. The first way you can pay yourself with an LLC is through a check. Another way is, and the most common way, is a transfer. Is a bank transfer. So an LLC is pointless if you do not have these other two main components. You're going to need a business bank account. You're also going to need a EIN number. Now, both of them is fairly easy to get, but you are going to need all three of them collectively in order to actually do this correctly. So you're going to basically need to file your business bank account under your LLC name and also the EIN number. Now you're going to need a personal and a business account within this bank, or one of each with another bank. But you are going to need a personal and a business account. Like I said, the most common way is transferring the funds. Now, once you transfer the funds over, that's considered a distribution of payment. That is considered a payment for you, the shareholder. So, and it's like I said, there is no cap. You can pay yourself whatever with the company. Now, once you have the EIN number in the business bank account, you have every component that you need to actually be structured as a business. Now, the taxes for an LLC is under the self-employment tax. The self-employment tax, I believe, is 15.3%. And you also going to have to do the Social Security tax, which is 12.4%. And you also going to do Medicare, which is 2.9%. So collectively, guys, we're looking at almost 30% of the revenue within the business going to the IRS. Outside of, other tax write-offs and things like that. But for the most part, those are the bare minimum taxations that you are looking forward to when filing under a LLC. So they're not going to tax the business. They're going to tax you. They're going to tax the shareholder of the company, and whatever you actually bring in is going to be collectively attached to your gross income. They are going to tax you as a self-employed worker, and self-employed workers get taxed probably the heaviest out of all of the classes, the asset classes, well, not asset classes, but out of all of the classes, which is employed, self-employed, or corporation. So they get taxed the heaviest. So you want to make sure that if you are looking to scale up, consider a S-Corp. An S-Corp, it has a lot lenient tax laws, but like I said, it is a cap of and a limit of how much you can actually pay yourself back. The salary for a S-Corp traditionally is 30% of the gross generated income. Okay, so yeah, you can pay yourself, but you want to make sure that you are looking out for taxes and expenses. So a lot of companies make the biggest mistake by paying themselves too much and over leveraging the cash flow that they have within the business or their reserves. And cash is the lifeline and the gasoline of your business. So when you run out of cash, you run out of business. So you want to make sure that you are putting your business in the most prominent position to be extremely cash positive. So paying yourself can be a good thing and a bad thing depending on the situation, but you will definitely want to look out for the other two expenses, which is the expenses within a company and the taxation. Guys, if you found any of this information helpful, please like and subscribe to the channel. Let us know exactly how you feel. If you have any comments or concerns about LLCs and actually paying yourself, leave a comment and let us know exactly the issue that you're having or your experience with this particular filing and experience. Just let us know how it 100% go for you. Guys, until next time, please take care of yourself and take care of your credit. Credit Coach Q out.